Nicholas, we've seen resources under pressure again after what we've heard from China today. The European Union not looking great, they're not producing, more trouble there coming out. Tonight we'll hear from the bank stress test. So what do you get into in this market?
Well, look, it's your usual bad day on the market. We've had a couple of really good movement lately. We've seen some very nice solid movement on the resource shares, and a little bit of negative news creeps into the picture and it all falls down again. So it's very much a house of cards. It's very tentative. It's very difficult to get some follow through here. So it's just a general negative day. But overall, if you look at the status quo, the JSE is still at 34,500 points, which is very close to all-time highs. So generally speaking, we're looking pretty good compared to the rest of the world at the moment. So we can be thankful for that.
Yesterday we saw that high level of on the JSE reached, and that's always a good sign and lovely for us to attract the foreign money. Some bad apples in the bunch though in this resource arena. We heard of Aquarius closing yet another mine, and I see the share price there is down by 12%. But to get to more exciting news, the defensive stocks are picking up again, and they're looking more attractive for foreign investors and even for our guys. Companies like MTN, are you not worried about the rumors and news out there anymore for them?
Well, we spoke about that a couple of weeks ago, but let's speak about all the questions that you've been asking me here. I think it's very important to understand that defensive quality is what people are going for at the moment. So that's why we see pretty robust figures for South African breweries. And I mean by figures, I mean share price performance. British American Tobacco, South African breweries, some of your other industrial stocks, your retailers, they're all considered slightly defensive. I think the no-go areas at the moment, or the ones that get hit the worst, are your resource shares, and specifically your platinum sector. I mean, that's been the absolute whipping boy of the market, and it's very sad to see the Everest mine close under care and maintenance. And 12% down on one day for Aquarius is dreadful, but if we understand it's down 50% in a month. So I feel very sorry for the shareholders that bought at 16 Rand that are sitting at 7 Rand at the moment. It's not an easy market, it's dreadful, but that's the way it is. You hopefully are not in there. So yes, I would agree with you. I think it's very important, due to all these circumstances that we are experiencing worldwide, it's important to have a defensive element on any portfolio, and I would certainly include that. However, within the resource sector, there are some stellar performers. I mean, yesterday we saw Kumba Iron Ore almost get to 600 Rand. I mean, if you've had a decent percentage of your portfolio in a stock that's considered risky, well, you've done incredibly well. It's the same with Exoro, also up to 210 Rand again. Yes, that it has come off. I mean, obviously profit taking has occurred, but still, generally speaking, those are the two that you would want. Sasfin is another one. It's all over the place, but generally speaking, it's keeping its head firmly above water. So I think it's very important to have a good selection of stocks, but steering clear of platinum and gold, I think, would be very important, because those are just so unpredictable and so volatile at the moment that you needn't take on that extra risk. Rather be safe than sorry, I guess, is the element that you should look at.
It does seem the iron ore and the coal, West Coal, that small coal producer, also putting
an interesting little story, yes.
Results,
yeah. Look, West Coal's very difficult now to compare with all the other major coal miners like Exoro and so on. I mean, there you've got some legal matters that have come to a head and have dissipated, and with that under the bridge now, you're starting to see some results come through. But if you're an American investor in gold, you wouldn't want to touch a coal company. I mean, there you've seen coal companies down 70% in value on a share price movement. So it's very company specific. So I've got no problem putting money into coal at the moment. I've got no problem putting money into iron ore. I think those two specifically are good areas of growth.
Just sticking with platinum for a moment,
yes.
The point was made earlier that long-term fundamentals are still in place and eventually demand will come back. Lonmin the other day, it was just, I think the day before yesterday, Lonmin was up by 5%. So it's not as if it's a long, steady decline for all those shares.
Well, look, Lonmin unfortunately is down 50% over a period of around about 8 months at the moment. And I heard via the grapevine that there are a couple of investment houses that are using these declines as an opportunity. And Lonmin was one of the names mentioned. I obviously won't mention the investment house, but definitely some strong buying off the 90 Rand level up to 100 Rand. And I see it's a little bit weaker today. But in general, when we speak about the fundamentals being intact, that is definitely something that we can debate into perpetuity. The difficulty is Europe has slowed down and is going to continuously be under pressure for at least the rest of this decade. That's going to put a huge pressure on the demand for platinum. In fact, looking at the Aquarius Platinum's report with regards to them closing the Everest mine, they're actually seeing a great surplus in platinum for this year. I can't recall the exact figure, but I do believe it was something 200,000 ounces, 500,000 ounces of platinum. In the heyday of platinum was in a deficit. There wasn't enough to go around. Now we're in a world growth environment that's very low. The demand for platinum is not coming through. There's a surplus, hence the price is negative. So I would say arguably the long-term fundamentals could still be there, all right? But the risk at the moment is short-term weakness that is very hard to predict how long that would go on for.
Let's take a look back at Sasol. Now, Sasol doesn't have any noticeable project that they're entering into in the next 4 years, but the price is attractive, even though oil prices are low. Your view on Sasol?
Well, I would agree with that. I do think Sasol is attractive. I think if one runs the numbers and from a longer term investment, I would say it's a critical stock to have on any decent South African portfolio. That said, it is very susceptible to the sentiment driven, what is the price of oil, what is the price of Sasol? We need to understand that Sasol's not a direct oil play. It's far higher up on the cost curve. However, if we take the graph of Sasol compared with the graph of oil, there's a distinct correlation. That's just the unfortunate reality of it, all right? But if we can look past that and we can look at the actual business and we understand the fundamentals and the metrics of the company, one would be silly not to consider nibbling stock at 350 to 360. So quite frankly, any major opportunities to the negative side, I consider being a good buying opportunity on Sasol.
What else caught the eye today for you?
Oh, that's a good one. Let me think now. Well, obviously Sasol. I mean, it was probably the most underperforming stock today. We saw a little bit of a recovery on gold stocks, but what really caught my eye is how the market just lost all its luster around about 4 o'clock. I left the office at about 3:30 and it was literally down 0.2%. We're now down 0.7%. Just shows what an impact the overseas markets have on our market. As soon as the US market opens at 3:30 our time, you do tend to get a lot of foreign desks that open, and the general sentiment there was negative today, hence we felt the impact on there. So I think that's what caught my eyes, just the amazing realization of just 1 hour of trade can take you from a flat situation to completely negative by the end of close.
Thanks for joining us, Nicholas.
Pleasure, good to be here.
That was Nicholas Sorour, Portfolio Manager at Sasfin.